Welcome to DFG Talks. Today we have the pleasure to introduce James Wool from DFG, CEO and founder, and Scott Trowbridge from BlockSwap. I'd like to give you both a warm welcome, and I'd like to welcome our audience today joining us to listen and understand a bit more of what's happening in the blockchain space. So welcome, James. Welcome, Scott.
Hello, everyone. This is James from DFG. Glad to see you guys again.
Hey, and Scott here. Great to meet all of you. I'm CEO of BlockSwap Network.
Okay, so we're gonna get started, guys. So before we get into details, would you mind sharing with us and the audience what kind of what background do we have, right? What background does each of us have, and DFG, and in this case, BlockSwap? So Scott, I'll begin with you. Would you mind sharing with us what is BlockSwap? What is your value proposition? What do you bring to the table?
Yeah, sure. Do you want me to start with my personal background, or should I just dive into BlockSwap Network?
You're welcome to do both.
Cool. Yeah, so I'll start with my crypto background. So I came into crypto 2014, more on the investment and research side. Was later the director of global business development for a protocol called WANchain, based down in Beijing. We also had an office in Austin, Texas, and London. So I led our EMEA team for London. After that, I built and ran the WeWork co-working spaces, fintech and blockchain incubator. And then whilst I was there, met my co-founder Matt, and started working on BlockSwap. So oversight on what BlockSwap is, we're an immutable, decentralized, non-custodial protocol that's bringing fixed income products to proof-of-stake chains. We utilize staking and proof-of-stake as a mechanism to trustlessly redistribute wealth to customers. We really believe that mainstream adoption in DeFi will be through solving everyday problems for everyday users. And the best way to ensure this is by having a safer and easier place to preserve and grow their wealth on chain. So essentially, we're providing a non-speculative savings market based on proof-of-stake native yield, at the same time focusing on providing the user onboarding in a very efficient and cost-effective manner. So we focus on two sets of users. One user is a user who wants to stake their native base token and earn a higher rate of yield through inflation rewards. And the other set of users are who want to bring their native fiat currency and earn a savings APY without having to touch proof-of-stake or staking or any type of real technical aspects themselves.
Great, thank you very much, Scott. Now, James, would you please, for those of you who are not aware, or for those in the audience who are not yet aware of what DFG or Digital Finance Group does, would you mind sharing us a bit of background and what you're doing in the space, please?
Sure. So my name is James. I started a company called DFG back in 2015. It's basically an investment firm in the crypto industry. So we start with investment in different startups. At that time it's pretty early stage, so we just take equity deals. We invest into companies like Circle, LedgerX, Brave, Ripple, RSK, UnoCoin, Bistos, Block, and a few probably are pretty good kind of project company in the crypto industry through 2015 to 2017. And in 2017, then the token, especially the ICO, become pretty popular. But at that time, I think we don't do a lot of investment in the ICO space because at that time it's pretty early stage about tokens, things that we don't fully understand it, which is fine. But since we missed a lot of opportunity at that time, really, after that we really do a lot of research and really dig into it and think this is something we want to invest. Then I would say start from 2018, DFG start doing a lot of investment in the token side, both in layer 1 protocol and also on different applications in different ecosystems. I guess on the layer 1 side, we invest into Polkadot, Near, Solana, Avalanche, Filecoin, a few others like proof of stake protocols, and also the other like IPFS and other things. So I guess I see the market pretty good, and so I overall speaking, the return for this protocol pretty pretty great. But I think right now, I think start from 2019 and 2020, because basically, unlike 2017, there are like only Bitcoin and Ether there, and a lot of other coins because scalability they came out. Right now, it's pretty much a lot of protocol building their own ecosystem. Ethereum probably the largest, but you still have Cosmos, Polkadot, Near, Avalanche, and other people that building different ecosystems. So right now, our strategy is pretty much and also by the way, Binance and Huobi, these kind of major players like your FTX also participate in the protocol side, right? So I guess our strategy is try to be more diversified on application side. I guess we are pretty much focused on DeFi, NFT, and other pro infrastructure which makes sense in different ecosystems. So far we invest around 60 different kind of pretty, I would say, decent kind of project in different ecosystems. So that's basically my background and the history of DFG. Thanks.
So James, if I may, I'm going to stay with you for a second. And could you please, so for the audience, if you visit the DFG website, right, and you see the overview of the funds that DFG has been able to grow within time, what makes DFG or you as a CEO focus on such a wide, let's say, a wide variety of different layer 1 and layer 2 projects? What is this? Could you share maybe the strategy or maybe your interest there? What do you see in the market?
Yeah, I think I guess it's a good question. I mean, we think it's probably a good time to diversify. But so far, I guess it's pretty much unlike the bull market in 2017, because at that time just about there's not a lot of ecosystem for the protocol. It's about Bitcoin, the Ether. It's about like the one single application, which is ICO on top of Ethereum. And because of scalability issues that we can see, Bitcoin Cash came out, BFC came out later, but you have these kind of so-called kind of Bitcoin competitor, and EOS and Tron, they try to solve the scalability issue of Ethereum and doing kind of I would say semi-trust ways about realized vision. And then, there's not really a lot of things happening in 2017. But right now, I think it's pretty much different because you have all these kind of protocols doing, very, very good visions and use different kind of technology, like IPFS one, Polkadot it's a wholly kind of new technology that use proof of stake. Right now, BSC is pretty good. It solved the scalability issue of Ethereum. Ethereum definitely work on there too, so they may solve that later. And then you got Solana, which is also a pretty good kind of protocol. So I think at this stage, you have to be diversified and take a look at different projects, different ecosystems, because they are each of them have very, very unique kind of like a vision and functionality to let people to and project build on top of it. So that's the reason why we are being diversified. On the application sector, unlike 2017, it's only about ICO. But right now, for example, DeFi is pretty much, I guess changing the people's understanding about the financial system, right? So I guess Uniswap being pretty much there, then change the way of people think about how to do the trading, and also make it obvious. And for the lending side, I mean it's pretty decent, and people can easily do that, use the technology. And this is pretty kind of, I would say, pretty different than 2017 spot fundraising. It's only about one application. It's pretty diversified. And for example, BlockSwap, it's definitely something that we feel that pretty interesting, that provider the bond, like a fixed income bond for people, which is pretty big in the traditional financial system, but which is probably missing in the DeFi ecosystem in the crypto world, right? So this is something I guess for us, we understand that it's probably a pretty new kind of bull market, which is totally different than 2017. So there's so many things came out recently about NFT as well. So there's so many innovation came out. So we don't want to miss any of that, miss the chance to support them. So that's the reason why we are pretty much, unlike 2017, is pretty much focused on the Bitcoin, use case in an exchange. But right now we are really getting involved and really being diversified here.
Great, thank you, James. So now I'm going to kind of keep this same line of thought and pass to you, Scott. So James was talking about the importance, right, that there has been in the shift within blockchain, crypto, and protocols, and how we've seen a shift from POW, proof of work, a consensus algorithm, to the POS, right? We see that even Ethereum is trying to move their protocol to this consensus algorithm. Could you please explain why the POS consensus algorithm is the best suited for BlockSwap network?
Yeah, sure. That's a great question. I think you really have to look at like what the benefits are in general. So we talk about scalability, we talk about increase in transaction volume, all of these additional benefits. For us specifically, like we're focused on sustainable savings markets. And you can see like proof of stake and staking is quite synonymous with fixed income products, like a government bond, for example, where you look at Ethereum or other proof of stake chains, they're paying stake as a steady inflation reward, and users are staking their assets as collateral for network security. In return, they're being paid a reward for that service, and that principal is redeemable anytime. So it's quite synonymous. This is quite similar to a government bond debt, which is paying a coupon rate to the user for lending their money in the form of a fixed rate yield, and the principal returned to them. The principal is returned to them at expiry. So there's many like similarities what we're seeing with like these government bonds and actually like just the proof of stake inflation reward actually being able to pay users this stable, sustainable yield source as well. And yeah, if you look at just the proof of stake landscape in general, all these different proof of stake chains, they continue to mature. They continue to add more and more liquidity over time. Look at just ETH2, for example, $200 billion worth of assets that will be transitioning over to proof of stake in the next, we hope, roughly 48 months. And there's already $7.5 billion worth of assets that's been deposited in the ETH2 staking contract. You look at the other side of DeFi in general. So like DeFi has grown total value locked above 60x, like above 6,000% in the past 12 months. And we've seen like a flux of these different protocol tokens incentivizing super short but super high rate yields. However, where we're really focused is like something that we're bringing is that's long-term fixed rate and sustainable as a savings product. So if you look at like sustainable savings markets, the relevance with proof of stake chains is very close.
I understand. Okay, I see. So staying with you, Scott, since let's say you have products, right? You offer products. You are a virtual asset service provider, and could you mind, for example, giving us a relationship between how this POS consensus algorithm is the best, let's say, way to move forward within the industry, and how your products are affected by it, or obviously how your products are best suited or best combined when working together? For example, you have Steakhouse, right? What benefits and how does it benefit the stakers, the users of your platform?
Sure, yeah. So Steakhouse currently is built on Ethereum, so like ETH2, and then we're transitioning over to other proof of stake chains in the very near future. So I'll give you like an Ethereum perspective, but it really applies to other proof of stake chains as well. Steakhouse, so you can describe it as it's an automated asset market maker. So it's a simple shared registry that allows node operators to register their node and associated validators on chain in order to permit liquidity abstraction. So I'm gonna try out like a conceptual perspective here because it's kind of relevant. So if you look at what's happened with like the Wall Street bets movement, right? So we saw like this coordination of individuals over Reddit basically coordinate themselves to create a movement in GameStop being a stock. Now, they were successful in some capacity, but where they were restricted was by Robinhood basically stopping them from buying more GameStop and restricting them from doing a short squeeze on these institutional investors. Now, the reason they were restricted is because this was based on a centralized application like Robinhood, which could turn it off at any given time. Now, you look at like blockchain and all these DeFi protocols, they're completely immutable. They're completely permissionless. Anyone can interact with them and no one can stop them. And so that's where I think like there's something very interesting with just these DeFi protocols in general. Specifically for Steakhouse, it enables us to automatically coordinate and create and grow like curated community around like a unique purpose. So how it works practically is for stakers, we really like simplified the staking process, whereby traditionally as a ETH2 validator, they bring their 32 ETH, they lock that in the deposit contract or stake that in the deposit contract and then run the ETH2 client. So we've enabled a validator to bring 32 ETH. They join a specific on-chain node called a Steakhouse, as you mentioned, and in return, they receive 32 ETH. In return for their 32 ETH, they receive 24 DETH and 8 slot token. Now the DETH is representing their representing their staked asset. So it's like liquid ETH. You can utilize that ETH and other DeFi protocols whilst continuing to secure the network, whilst continuing to stake your ETH and also earn the native inflation rewards. And then the other token is a slot token. And this is acting like a perpetual bond. And you can see it as like the equity of that Steakhouse. So I'll give you an example. Let's just say that Wall Street Bets, they spun up this Steakhouse. They have a lot of community behind them. And they were able to attract, let's just say 10 validators in the first day. Those 10 validators are all bringing 32 ETH. Now the book value of that Steakhouse is now worth 3,200 ETH. And of course, the market value depends on how the performance of that Steakhouse is doing. Is it being slashed? Is there new liquidity coming into that Steakhouse? All of this is giving a value token to all of the users that are participating in that Steakhouse. So like Wall Street Bets right now, the value is coming from their, I guess, their interaction with others and actually being able to be part of this sort of movement. Now they'd be able to actually have a token which represents the value of how that Steakhouse is performing.
Okay, I see. So this is, let's say, this is one of your main products. Am I right, Scott?
Yeah, Steakhouse and OpenSaver are definitely the two main ones that we're facilitating.
Okay, and could you go into detail about what is OpenSaver and how does it secure the yield rate for end users, for example?
Yeah, sure. So OpenSaver, it's a brand new architecture. We've really built it from the ground up, and it's focused on bringing sustainable savings markets mainstream to everyday users. So every asset in OpenSaver ecosystem has a fixed rate of yield, and this is in the case of a end user that doesn't need to know about crypto or in general, or even like proof of stake and consensus or any of the technicalities of proof of stake consensus. They can buy a Saver dollar, and this Saver dollar is giving them a 7% interest rate, and it's coming from a bonded proof of stake asset as its collateral backing that deposit. So every time a Saver is purchased, a Saver bond is minted, and the collateral of that Saver bond is keeping 150% staked asset collateral as the reserve. And then let's just say that the price of the base asset decreases, so maybe ETH drops in price. This now creates an arbitrage opportunity to go long on that staked asset and for the market to buy up the Saver bond. That buying up the Saver bond gives that LP managed rights for that Saver bond, which they can obviously conduct that however they wish in the market. So OpenSaver smart contracts will make sure that the assets always maintain 150% collateralized debt ratio. And then you can see like OpenSaver, it's completely built on an automated market maker model. So just like a Uniswap or other liquidity pool protocols where users, they add their liquidity. So one user will add their liquidity to a loader pool, either in D token or slot. So the two tokens that I mentioned coming from the Steakhouse. or they're bringing USD coin to actually buy up these saver bonds from the market. And so in the case of a liquidity provider bringing D token, they're actually receiving a 10% APY on their staked ETH. And this is in addition to their native staking rewards. So it's quite a considerable amount. And then for a slot token holder, it gives them a mechanism to actually sell their slot to the market. So let's just say that you're a GameStop user, they're running their Steakhouse, the value of that slot token has increased by a magnitude. They can now liquidate some of that slot to the market.
Okay, great. Yeah. So James, I'm gonna go on and pass to you now that Scott has been kind enough to share with us, the products offered on BlockSwap network and how they benefit the users from different, different shades of the world or different shades of society. What brings you, as an investor, right, to be interested in BlockSwap?
Oh yeah, thanks for the question. I guess first of all, still about our investment philosophy is about like whether we invest into the right team. I guess when we talk to Martin and Scott, we feel like this is better the team which can make things work and provide good product to the users. So first of all, I think this is probably the most important criteria for a student investment. And definitely the BlockSwap team is pretty very solid with good products. So that's why we are super excited and investing into the BlockSwap. That's the first. The second, as Scott probably already explained before, and definitely you know better than me about this, but I guess from the product side, I think that really it's pretty important to have such kind of product. Just imagine Ether 2.0. When I talked to Ethereum Foundation probably like last year, whatever, and they expect the Ether 2.0 to launch probably like by the end of Q2 next year, which is probably I would say probably if everything goes super good, then that's the case. But I suppose it will happen later. Just imagine when you do the staking your ETH on Ethereum 2.0, then you have to wait for at least like more than a year for that, right? It could be 2 years, it could be longer. So I guess this, but meanwhile, it would probably cost you a lot of opportunity cost for this, whether it's like a good DeFi or kind of project you want to do the liquidity mining, use Ether, or there's like using the market where change, you want to sell part of your position in Ether. There's so many kind of things that which can probably do if you have the liquidity, right? So guys, but unless you have that, then you just stick there, then really miss a lot of opportunities, But BlockSwap, I guess, for the Steakhouse really give you a kind of tools and the ways to kind of to solve that problem. That's probably I would say super important to Ethereum and also to other proof of stake blockchain, right? So I mean, the others probably the lockup time period is shorter, like nearest per 2 days. Polkadot is like the 28 days, but so far giving you the liquidity is super important things to every user. So that's why I think the products is pretty it have really big market in the future. And also the open saver is pretty a very good new innovations which give you probably the very solid like fixed income. And this is in the crypto world, people were like probably like a high risk kind of investment and really kind of like care about the huge return on top of that. But when you put big money into it, you really care about the the control risk, whether you can give a fixed income. And really this is the thinking ways of the institutional investor. And this is also a very, I would say it's become much more important in the market because we will see a lot of big money institutional investor come into place. And this is something that I will be, kind of super excited about as well. And this will have huge market share in the future. So I guess, overall speaking, about the team, we are 100% confident in the team, and also about the product, we're super excited about it. I mean, these are probably the two major reasons that why I think DFG work together with BlockSwap.
Great, thank you, James. Scott, to close up the conversation, I'd like to ask you, to share, if possible, with the audience what your plans are to drive adoption, right, for the BlockSwap network protocol, and what your upcoming roadmap is. You know, this is very important for people around the world and for potential users. So would you mind sharing? Is it okay?
Yeah, absolutely. I'd love to. So building a community is very important for us actually to gain adoption. So one of the things that we've kind of taken a different approach. So we have a community net that's coming up, and this has a token associated to it. So this will be running for the next 5 months. And this is really to build like a foundational user base whilst at the same time stress testing the protocol and like really finding its flaws, pushing it to the max, and actually being able to fix any issues like bugs along the way, whilst at the same time refining UX and all these different aspects that are super important before we go to mainnet and actually go through like formal verification and auditing, etc. So what we've done here is we've actually liquidated 10% of our fully diluted token supply, and 5% of that is going to be distributed through incentive rewards over the next 5 months. So it's a large amount of tokens, 250 million tokens, 50 million tokens per month. And this is structured in several different ways. So one, users who play the Steakhouse game. So essentially what will happen is we'll start with a maximum of 8 steakhouses, has some really amazing partners that are already going to be running these steakhouses. And the steakhouses will act on like a leaderboard. So essentially, the more liquidity they have within these steakhouses, the higher ranking that they are in the steakhouse leaderboard, and the more proportion of rewards that steakhouse will receive, and all of the stakers within that steakhouse will obviously receive. The other side of that is adding liquidity to different dexes. So in the month 1, adding liquidity to Uniswap, they'll actually be able to farm our CBSN token. The CBSN token is going live. We're doing a balance at LBP actually today, so April 16th, whenever you release this. And it will be running for the next 3 days, after which we'll be spinning up a Uniswap pool, seeding the Uniswap pool with that liquidity, where users anywhere in the world can buy and actually acquire CBSN token. And then with CBSN token, they'll be able to connect their wallet to Telegram. So we're running all of this over Telegram and later Discord. Connect their wallet to Telegram. If they have the CBSN token within that wallet, that will give them permission to access to join the community net. And then they can choose which stakehouse they would like to stake with. So yeah, I think it's going to be a very interesting way of how do we educate users and how do we showcase them to coordinate around these different stakehouses. So that's one side. On the progress, so as I said, we are doing the community net this month. We also have been part of the Algorand EU accelerator. So we're selected as one of 11 projects. We have our demo day coming up for that at the end of April. And the community net will be really showcasing like the universal basic savings account and Steakhouse. And then after that, our core focus, once ETH2 and Algo has been pushed to mainnet in 5 months' time, the next focus will be on Polkadot, so DOT, and Cardano and ADA. So that's really our roadmap.
Great. Thank you very much, Scott. I'm sure to say that us, James, me, myself, and the audience are all wishing you the best of luck and, you know, as much success as possible with this endeavor. So yeah, I just wanted to close it off and thank everyone who has kindly taken the time to join us today for this iteration of DFG Talks with our featured guest, Scott from BlockSwap, and James Wolf from DFG. And we will see you soon in the next episode. So thank you very much for joining us. I'll leave Scott and James to have the last words.
Excellent. Yeah. Thanks for inviting me on. It was really great to present BlockSwap. We're super excited what we're building and for what's to come in the future. There's a lot of things happening in the background that we're excited to announce, and we're super proud and super pleased to be part of the DFG family. So yeah, thank you, James, and the investment team.
Thank everyone listening there, this video, and also thank you, Scott, and join the interview with us. And I just want to say, you guys can already go to the balancer and join LBP. I think it will be 3 days later, right? I guess the project won't disappoint you, and you can definitely do that.
Great. Thank you very much, everyone. Thank you for joining us, and have a good day. Thank you, Scott. Thank you, James.
Thanks.
Thank you.
Bye-bye.